Hi, everyone. If you just joined, I'm Federico Mazzoli, VP of Product at dLocal. And today we're going to be talking about subscriptions in India and network tokenization. Probably most of you have heard that in the past couple of months, there have been some changes, and some changes are going to come soon as well, regarding how people and how companies need to manage card on file payments in India. All these changes are regarding new regulations from the RBI, and they all sort of benefit the end user, the card holder, to give them more control and more security on their payments. On the other side, that also involves some changes that merchants need to do to adapt to these new regulations. So we're going to be discussing this. First of all, we're going to be doing a brief introduction on card on file payments and the different types of card on file payments on a high level. Then we're going to be talking about subscriptions in India and how to solve this use case. And we're going to be discussing about the eMandates and how to manage those. And then we're going to be talking about network tokenization and the changes there as well. And then we're going to leave a few minutes for questions from the audience. So let's start by identifying the two big buckets, let's say, of card on file payments in India, but in the rest of the world as well. On the one side, we have what we call merchant-initiated transactions. Think about this like a Spotify or Netflix subscription. So basically, these are transactions in which the user stored their card with a merchant. They probably gave some consent on this initial setup of a subscription, and then the merchant can charge that user's card or bank account without any authentication or from the user in those subsequent payments. Imagine a Netflix subscription. If the user is there to confirm the payment in every month, so it doesn't make much sense for that use case. In India, in particular, for merchant-initiated transactions, an eMandate needs to be created. We're going to be talking about this in a second. And this applies for periodic payments, so not transactions initiated by customer. That's customer-initiated transactions. And what the benefit of this, or let's say the limit of this, is that up to 5,000 INR, there's no OTP or two-factor authentication needed from the user for each subsequent payment. On the other side, we have customer-initiated transactions. These are transactions where the customer saved the card with the merchant, and then it's right there to charge their card or their bank accounts. For example, when you ask for an Uber or Didi ride, the user is not entering their card every time, but they are right there to click the button to request the ride, or Amazon one-click, for example. So for this scenario, this is where the network tokenization changes are going to impact the most. We're going to be talking about later in the presentation. But basically, just to summarize and give a little of synopsis, starting June 30th, only the issuers and the networks will be able to store the actual card information, the PANs, and merchants and payment service providers such as dLocal will only be able to handle DPANs, so network tokens, which are basically representations of those real card numbers from the networks. This, again, we're going to be talking about later, but it's to protect the user and prevent fraud, and will end in maximizing conversion rates. So let's start by talking about merchant-initiated transactions. So we're going to focus first on the use case of subscriptions. But first we need to understand what this e-mandate is, which is basically on a very high level. It's a contract between the consumer and the issuing bank to allow the latter to automatically charge their bank accounts without a second factor authentication after that first enrollment. So basically, it's consent from the end user to have an auto debit on their account. So starting October of last year, there was this new directive from the RBI that went into effect for all major payment methods, so cards, prepaid payment instruments, UPI, which basically required the user to create this e-mandate for subscription payments. So basically, the user, they all need to authenticate to enroll in this new e-mandate, and that after that authentication, as long as the payments are below 5,000 INR, there's no authentication needed. Now, with each new mandate creation, there's like a unique identifier of this e-mandate, which is created. Think about it like a subscription ID or something, where then the merchant can use to charge that user on a recurring basis. And also, as a matter of an extra layer of security, the user will be pre-notified before every charge, every month or every quarter or every year. So basically, the issuer is notifying the user before they are charged in every charging period. So the user has the time to maybe cancel the subscription if they want to, and always be aware of how much and when they are going to be charged. So from a user standpoint, as I mentioned before, only in the initial mandate creation, the customer needs to provide this consent with a second factor authentication. And this will depend on the payment method that they're going to use. But for the most part, they need to complete this authentication with their issuing bank or their UPI app. Subsequent payments after this initial setup does not require OTP or a second factor authentication as long as it's below 5,000 rupees. Assuming that the payment is above 5,000 rupees, then yes, the user will need to authenticate themselves with a second factor authentication. So how can we help here? So at dLocal, we tried to simplify this complexity by providing a solution with our dLocal One API. So basically, if you are using dLocal in other countries, you're going to find the solution for this really straightforward and very aligned with what you integrated in other markets. And if you didn't, I welcome you to visit our API documentation and see how easy it is to set up. But basically, with dLocal's API, you can very easily create new subscriptions in India with both fixed or variable amounts. So basically, let's say you set up a subscription for the basic plan, and then a few months later, the user upgraded to the premium plan, which is a little bit more expensive. Then there's no problem. There's no extra authentication needed. You can simply change the amount of the subscription dynamically on each payment. Of course, the user will be notified in this pre-notification of the new amount. You can also set up flexible schedules. So this can be maybe a daily subscription or a monthly one or an yearly one, also quarterly. So we're very flexible of the types of subscription that are available. As we always do in dLocal, all payments are processed locally. As I mentioned before, this pre-notification, dLocal takes care of that. Actually, the issuer bank is the one notifying the user, but you don't have to worry about notifying the users yourself. That's handled by behind our API. We also, and we're going to show this in a few minutes, you can retry rejected payments when you're trying to improve your success, your authentication rates. And also we allow you to cancel the subscriptions. We're going to be talking this in a minute. So let's take a look at the user flow so you get an idea of what the user experience looks like. And for this example, just for simplification, we're going to be using UPI as a payment method. So the first step on the merchant's web or app, the user would select the plan that they want to enroll to. So then they will need to select the payment method. In this case, let's assume it's UPI. They would enter their UPI ID, and as soon as they do that, the user would receive a push notification or SMS from their issuing bank or their UPI app to confirm or to authenticate themselves. The user would see something like this with a description of the subscription, and they will need to click to approve this enrollment, enter their UPI PIN, and that's it. The mandate has been created, and now there are two options here. You can both charge the user on this first enrollment, or you can defer that in case you have a free trial to a later date. Now we're going to go a little bit deeper into the API flow. I'm not going to get into the details of how the request looks like, but I think the flow might be interesting to some of you. So basically, the first step is the user would select the payment method, the India recurring as a payment method, and the merchant would trigger dLocal's API to initiate a subscription. In this case, we will then return a redirect URL to the user so they can complete the authentication. The user will receive the push notification from will be redirected to the checkout to trigger their authentication, and once they authenticate themselves, then you would receive a webhook with the verified status of the subscription. So basically, it's an asynchronous flow, and once the subscription has been verified, then you can enable the service on your side. Now, up to this point, as I mentioned before, you have two options. You can either charge the user in this initial phase, or you can defer that to later. Now, some key thing here is that you will be receiving a subscription ID on this flow, and that's what you need to use to charge the user in later payments. So in the recurring charge, let's say at the end of each month, you would trigger via dLocal's API this pre-notification by including the subscription ID and a flag called pre-notify as true. So basically what this does, in a synchronous response, will tell you, okay, this is on a pending status, we will notify the user. After the issuer notified the user with this push notification or SMS, then we will send you another notification via API, letting you know that the user has been notified. Okay, you don't need to do anything with this information. It's just for how you decide to incorporate that into your user experience. Then automatically after this, we wait 24 hours and we will actually charge the user. So you don't need to send any other request to the API. This is done automatically. And if the payment has been successful, then we will send you a notification via webhook with a paid status. And along with this, the issuer will send a post-charge notification to the user, letting them know that their account has been debited. Again, this notification to the user is up to the issuing bank, so the experience might vary depending on the bank. So the key here is that there's only one request needed from the merchant, that is to trigger the pre-notification, and then the charge is automatically triggered after that as shortly after the user has been notified, 24 hours after the user has been notified. Now, assuming the transaction, the charge has been rejected, maybe the user didn't have sufficient funds, end of the month, they're waiting for their paycheck, you have the option to retry these charges. So in the case of UPI, you can retry up to 2 additional times after the initial charge. But basically, you would trigger via API a renew subscription. Basically, it's the same request, but with the pre-notify flag as false. And then we would trigger in a synchronous form a charge to the user. This doesn't require a pre-notification like the original charge. Yeah, if the payment has been approved, we will let you know via webhook. Now, there's another piece of this that is cancellations. So there are basically 2 ways in which a user can cancel a subscription. One is through the merchant's app or web, and the other one, and this is something new with this new regulation, is directly with their issuing bank. So assuming that the user wants to cancel directly through the merchant site, then the merchant will need to call our cancel subscription API. And with that ID, we will simply cancel the subscription, and then any other request to charge the user will be rejected. Now that's the first flow. Let's assume the other one, that is that the user goes directly to their issuing bank. They would be able to see all the subscriptions that they have available from all the different merchants that they use dLocal or any other provider out there. And they can go directly there and cancel their subscription. So if they do, then basically when a new charge request is generated, then it will be rejected with a specific error code letting the merchant know that the subscription is no longer valid. Now, we briefly discussed how merchant-initiated transactions or subscriptions are now need to be handled in India. Now we're going to be moving to customer-initiated transactions, which basically it means that the user is right there, actively participating in the transaction, either asking for the ride or clicking on the buy button of their shopping cart. And basically, the main change here, as I mentioned before, is that network tokenization starts to be mandatory to handle saved card information. So we're going to be talking about network tokenization. As I mentioned before, starting in late this half of the year, so June 30th of this year, only networks and issuers we're going to be able to store the actual card information, the real PAN of the card. So starting from this date, only network tokens will be allowed for customer-initiated transactions for card on file. This means that this DPAN, this network token, has to be stored by the merchant or by the payment service providers and not the PAN itself. And as opposed to the emandate solution, in here, as it was before, when processing locally, OTP or two-factor authentication is always required on every payment. So how can we help you with this? So basically, we provide 2 main solutions. So basically, we can create the network tokens on your behalf. So we provide network tokenization services. We work with multiple partners to allow for this. And also, you can also use your own token requester if needed. So if you're using an international token requester, you can still create the network tokens and simply send to dLocal the network token and the cryptogram, and we can process the payment with that. So we have both options available. And some of the benefits of network tokens is that if the card expires or has to be renewed, then the same network token can be used to further payments. So there's no renewal required in those cases. So how can this help? So basically, this will help improve conversion rates and reduce fraud. So tokenized network tokenized data can include domain controls, so you can reduce the misuse of this information. So for example, you can limit the domain or where that card is used, so you can reduce the threat of online attacks and data breaches. And also, each transaction can include per transaction elements, such as a cryptogram that is created on each transaction, or the CVV. So you make sure that the card holder is the actual person behind that purchase, and with that, reduce fraud risk. And by using network tokenization, it will depend on the issuing bank, but you will see your conversion rates hugely improved. So that was it for the presentation. It was very high level, so I encourage you to ask questions of any kind, both from the topics themselves, but also from dLocal. We're happy to answer.
Hi everyone, Andre from the product team here. Feel free to leave your questions on the chat box or the question box. Fede, we actually have a couple of questions. The first one is if the emandate and subscription ID are the same.
So the subscription ID is basically a pointer to an emandate. So basically that's the identifier that you will need to send us, so we know which subscription or mandates to charge.
Perfect. We have another question, actually a good one, is dLocal a one-stop shop, or do we need relationships with Paytm, UPI, etc.?
It's dLocal, as we always work in every market that we operate, is a one-stop shop. So with one contract with dLocal, with one integration with dLocal, you have access to all of our payment methods in every country that we operate. So we try to simplify this as much as we can.
Another question Fede just came in is, can we process customer-initiated transactions without CVV?
Sorry, can you go again? I couldn't get the question.
Sure. Can we process customer-initiated transactions without the CVV?
No, the CVV is required.
Good. Another question, does it cover card payments only or just APMs?
It covers all payment methods, so cards and UPI as well.
Perfect. Another good question is, does that mean that after June the 30th, the merchant won't be able to operate cards if it doesn't have a verification system?
Right, starting from the 30th, only payments, card on file payments using network tokens will be allowed to be processed.
Good. Do you offer merchant of record model, or is it purely transaction processing?
We do offer merchant of record model, yes.
Cool. And the last two questions, because we're running out of time. Recurring payments with cards do require DPAN's use as well, or can the merchant only store the emandate ID?
Recurring payments, as where you don't want the user to authenticate on each payment, doesn't require the merchant to store the network token. Just with the subscription ID, the emandate ID, that's enough.
Thanks, Fede. And the last question, and also a comment, feel free to, all the questions that weren't answered or you want or come up after this call, feel free to email it to us. And also a recording of this webinar will be available in our site after the webinar. And the last question, can you comment, Fede, on the 3DS requirement for card processing in India?
So 3DS requirement, that's the OTP and 2FA part that I was mentioned before. So for customer initiated transaction, 3DS is required on each transaction. And for emandate payments, only on the enrollment, and if the transaction is above 5,000 INR. If not, if it's below 5,000 INR on an emandate, it is not needed.
Perfect. Thanks, Fede. Again, a recording will be available in our site. All the questions that were answered, we will be answering by email. And if you come up with any more questions, feel free to email to us. Thanks, Fede, for this webinar.
You're welcome. Thanks, everyone.